Right. One of the easiest way to be able to understand top-down analysis is to get to know or analyze the market from a higher time frame down to a lower time frame. And we all know that when it comes to analyzing the market from a higher time frame down to a lower time frame, the dominant market direction is always what you're supposed to be going for. As in, if the higher time frame is selling or it's on a downtrend, that is basically the direction you're supposed to be taking. If the higher time frame is on an uptrend, that is the direction you're supposed to be taking. Now, I'm going to take you through how to do top-down analysis, and this is from EURUSD. EURUSD is actually one of the best assets ever if you're trading currencies, and apart from that, also it has some kind of a sense of direction, especially if you understand how to do top-down analysis and also how to do market analysis. Now, when it comes to top-down analysis, this is how I normally like doing it. I just identify the most recent highs and the most recent low from the daily time frame. Again, when it comes to analyzing the market, it depends on the type of a trader you are. There are some traders who are scalpers. We have scalpers. We have swing traders, and we also have day traders. We have positional traders. Of course, positional traders and swing traders are almost the same, because these are people who take a trade once a month or maybe a whole year. These are people who place a trade and then they stay out of the market for the longest time. Then when you talk about day traders, these are people who analyze the market and probably close their trades within a day or two. And then scalpers are people who get in and out of the market within a short period of time. So these are all types of traders. And when it comes to analyzing the market, it depends with the type of a trader that you are. Now, ladies and gentlemen, for me, I am a massive trader with a robot. I'm using a robot that is called Royal Q, and Royal Q is a robot that can automate your trading. It doesn't matter whether you are busy with some other things, whether you are at work or you have time. This particular robot can do everything for you. It can trade for you automatically, and it can give you like between 1 to 5% on a daily basis of your capital, depending on the capital that you're putting in. And this particular robot, ladies and gentlemen, just needs a one-off, not one-off, but a yearly subscription of $120. With $120, you subscribe to it, and then this particular robot is going to trade for you for the whole year. Your capital is going to be safe in your Binance or your Indodax, your Kraken, your OKX, in your wallet. In short, your capital is going to be very safe in your wallet. But for the robot, you just need to subscribe to it $120 once every year, and your capital is going to be very safe. So you only do what we call API binding, whereby the robot is going to only read what is on the wallet, and that simply means it's going to your account is very safe. This is something that the robot does not get into contact with your money. You're very safe, and it trades for you automatically or semi-automatically. So if you want to get into our community, just hit me. I'll a hi on my WhatsApp. My number is on bio, and of course I'm going to give you my information. In the meantime, let's talk about top-down analysis. Top-down analysis, ladies and gentlemen, I do it in different ways. For example, I'm going to give you an example. If you're a swing trader or you're a positional trader, you need to analyze your market from the monthly time frame. You analyze your market from the monthly time frame, and then from the monthly time frame down to the daily time frame. So maybe you're doing analysis from only 3 time frames: monthly, weekly, and daily. Right? That is if you are a positional trader: monthly, weekly, and daily. Right? But if you are as a day trader, you can start from analyzing the daily time frame. 4-hour time frame, and you take your trades on the 15 minutes time frame. Right? That is now a day trader. If you are a scalper, you can analyze the market from 1-hour time frame, 5 minutes time frame, and you take your entries from 1 minute time frame. All right, that means you are a scalper. You want to get in and get out. So what I'm trying to say is that whenever you're analyzing your market, always make sure that you're at least analyzing 3 time frames, a minimum of 3 time frames, and then now you take the lowest time frame to be your entry time frame. All right, so yesterday we discussed about support and resistance, and I believe you all understand already how we mark out our support and resistance. If you did not watch that video, just go back to get it somewhere on my videos. You are going to find that video that is going to be discussing about how to plot your support and resistance, and that is something that we discussed in details yesterday. Okay, is it yesterday or the day before yesterday? You're just going to find one of the videos that is talking about support and resistance on my videos, on my list. So now when it comes to positional traders, if you're a position traders or a swing trader, this is how you analyze the market. You get to understand the most recent high and the most recent low. So for this particular one here, if you look at it carefully, you're going to see that this was the high, and then from there the market went down, and then it pushed a little bit higher to somewhere here. Actually, we can just go ahead and say to somewhere there, and then now the market is trying to push low. Why is it coming down? It is coming down because it is working to fill in this fair value gap. For those people who are SMC traders, you're going to find that we have a fair value gap here, there. So it actually came down to fill in that path. And then right now, as you can see, we have an undecisive candlestick that is actually working on that. We are on the monthly time frame, and this is February, ladies and gentlemen. This is February 1st. No, this is 1st of January. Today is Sunday. Yeah, today is Sunday. That is why it is still reading 1st of January, 25th of January, because today is Sunday. So we are still on the same time frame. Now, so when you're analyzing this market, you're going to realize that the market is actually on a sell. The market is selling on the monthly time frame. The market is selling. So we are asking ourselves, what is going to happen when we open the market at midnight today or tomorrow? What is going to happen? So it is very, very important for us to understand what is happening in the market before we even decide what direction we're going to take. If you take a look at this carefully, you're going to see that there was some kind of a consolidation here. There was some kind of a consolidation here, and then the market broke below with a candlestick body. It broke below with a candlestick body, and when the market breaks out of a box, most of the time it is expected to continue going in that particular direction. But now this is what we're saying: the market can push down to maybe somewhere here, then come back to here, then push down again, and then go all the way up. Or the opposite of that can also happen. So when we are analyzing the market, we are simply trying to find out what are the possible positions, or what are the possible areas that the market is going to go to. What are the possible areas that the market is going to go to? So whenever you want to understand how to do top-down analysis, that is now top-down analysis. When it comes to top-down analysis, make sure that you're analyzing the market from a higher time frame to a lower time frame. So let me just give you something small here that you can be able to work with. So top-down analysis, oh sorry, I have to get this down, and then I bring this up, and then now I type. Okay, so top-down analysis. Top-down analysis, we have said you take a look at least 3 time frames, depending on the type of a trader that you are. You take a look at least 3 time frames. So the first time frame, if you're a swing trader, we are talking about from the monthly time frame. Get to know the direction of the monthly time frame, and then go down to the weekly time frame, and then pick your trade at daily time frame. If you're a positional, that is if you're a positional trader or a swing trader. If you're a day trader, you can analyze the market from either daily or 4-hour time frame. Either of these 2 time frames are okay for a day trader, and then you can be taking your trades from the 5 minutes time frame or 15 minutes time frame. If you are a scalper, get started from the 4-hour time frame or maybe the 1-hour time frame, and then get your trades from the 1-minute time frame. Of course, when it comes to scalping, it simply means that you're getting in and out of the market within a short period of time, and then you now get off with your profits. So basically that is how I get to look at top-down analysis. We're going to have a moment when you're going to do it in details, but for now, thank you so much for watching. And if you have not followed me, follow me for more of this kind of content so that we can grow together. Ciao, and see you on the next one.